Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode explores a new topic with a guest who brings their unique experience and knowledge. Tune in and discover something new each time you listen.
Good morning and welcome to Bank Talk. I'm Charlie Kelly, your host and partner at Remedy Consulting. Today we have Michael Crowell from University Federal Credit Union. UFCU has seen growth, quite a bit of growth in the last few years, and I thought it might be interesting to talk about just how they're growing from a branch perspective physically, as well as a virtual growth strategy. So thought we'd spend a little bit of time in each of those, maybe kind of talk about how they think about the numbers related to each of those. And, hopefully get some philosophical discussion going on just how they intend to grow the credit union in the future. So without further ado, let's get to Bank Talk. Today I have with me Michael Crowell, CEO of UFCU. Michael, thank you for joining us.
Charlie, pleasure to be here. Thank you for this opportunity.
So UFCU, formerly University Federal Credit Union, or could you give us just a little bit of background about the organization and sort of where it's been, where you're taking it?
Sure. So we are founded essentially 90 years ago at the University of Texas, Austin, by professors. The kind of stereotypical pencil box, cigar box story, but grown from $850 in deposits to now over $4 billion, and with 400,000 members across the state and really across the country, frankly, and now serve not only higher education institutions throughout the state, but also really some of the communities as well. And for us, it's an exciting journey that we're on, and obviously honoring the legacy and past where we are. And so our name is University Federal Credit Union, but I think as we became more broadly known in the market, it was important for us to just shorten that. So we go by UFCU, our acronym, essentially today.
Okay, so I thought, Michael, that today we could spend a little bit of time just talking about how you think about the difference between opening a physical branch versus the things that you're doing in the digital space. So if you don't mind, let's start with the physical, the brick and mortar, right?
Sure.
The best use case I can think of is you're in multiple university towns, but you find a location possibly at another university town, either next state, next county, right? When you think of opening up that next branch, how do you, dollar-wise, how do you think about it financially, whether it's worth opening that location? And then how do you get to ROI? I guess would probably be the two questions that I would have. At what point do you kind of say this is a successful branch, or aren't you really thinking about it that way?
I think we are. I think even before that, though, what I'd say is, for us, we're focused on making a difference in, of course, members' lives and in their communities, and we're focused on the omni-channel banking experience for the members. And so for us, that includes branches, phone, and digital. But from the branching side, most of our branches today are in Central Texas. We've had a couple of branches in the Houston area and are expanding there. And the question is, well, why? Why are we expanding? And I think for us, it's really, one, do we believe that we can deliver, provide value to not only our members there, but new members as well? And so what's our reason for being there? So in Houston, we are starting out with a building on a couple of large medical schools there, relationships with them, but recognizing that we also have an established membership base that came to us in a number of ways. And so for a variety of reasons. So when we look at a branch, first of all, is there a reason to be in the marketplace? Yes. Once that question's answered, it's then, how do we assess, the right location? So we use third parties to help identify those things. And then for us, we do have a profitability model for the branches. And obviously we want to be good stewards of our members' money. And so we do look at typically a 3.5 to 4 year break-even point based on the utilization of that branch and members in the areas that it serves. We believe branches still matter. We find that through our research and through actual usage, whether it's age-based or otherwise, that people do look to the branch, especially for those meaningful points in their lives where they want to be able to sit across the desk or sit side by side with the person and look at them in the eye and have that challenging conversation or get advice on something that they're experiencing in their lives at the time or trying to accomplish.
Okay. All right. So you said a couple interesting things there. One of them that hit me was as your members move around the state, right? So maybe they went to a university in one place and they move around the state, and eventually you still
Right.
got to service their needs.
That's right.
So I thought that I think that's interesting and fascinating. The other thing that you said that I want to kind of just dig into a little bit is when you talk about utilization, I have always a hard time pinning people down on that, right? So when I say okay, break even, I would say one of two things jumps to my mind. Number one is it can't be visits. It has to be something to do with opening accounts, right? Or buying new products or what have you. And again, this is my experience in the banking credit union space where you think about profitability, right?
Right.
When you think about utilization of a new branch, specifically in that sort of 3.5 to 4.5 year break even, dig down a little bit for me. What does break even mean? How are you deciding that branch is profitable?
But really, I guess there's two things when I think about one from if it's in what I'll call an infill branch, right? Let's say we're just filling in existing footprint. Those branches are going to have a much faster path, right? Because you have members there that you're serving and deepening relationships with. It's the expansion branches that are typically going to take you longer, right? Where you may or may not have some of the brand recognition that you enjoy in your strongholds where your footprint is today. So for us, I know there's a number of models and debates about how do you look at branch profitability. We tightly define the area that the branch is serving, and then we look at the accounts within that. We call it geocoding them. So it's not a simple, hey, it's 3 mile radius or 1 mile radius. It's actually kind of customized based on the actual location itself. And then we look at utilization of the branch. Yeah, to your point, what are the new accounts that are being opened? Are there new memberships being generated? What's the value of the products that are being utilized? Of course, the cost side is easy to capture, right? Because we have the cost, but yeah, and then we look at
Yeah.
again, and so before we open a branch, we're also looking at what's the market opportunity, right? Are there enough households there that we believe we can serve well and are within we have target personas that we're working towards. So from credit seekers, credit builders, and flourishing families, mostly focused on folks in those segments of and how do we meet their needs. So yeah, we do have a model that we quantify it with math.
That's
Yeah,
helpful. Like I said, I mean, I always thought it couldn't just be visits to the branch. It's got to be something else that leads you to believe that there's profitability. And again, this just comes from talking to a lot of CEOs, and when I say what's an account worth, I can't tell you how many of them can't answer that question. And by that I mean what is it worth to open up a new one? I can find U.S. Bank always offered me $500 to open an account, so they must think
right,
it's worth more than 500. But
right.
just
Yeah, they're
just the
doing.
concept to answer that question, I thought would be basic stuff, but it doesn't seem to be.
Yeah, yeah. I mean, essentially, what I think they're doing, and I know what we do is we do a net present value calculation of the value of a service, right? So loans are easy because you can calculate the net present value of them. It's the credit card use, anything that has a recurring usage is a little bit more challenging, but you have your user base today from which you can extrapolate and use
Yeah, and
that.
you're oddly, Michael, you're the first person on this podcast, I think, in all the years we've been doing it that ever brought up the net present value of the product of the relationship. And because I would say exactly the same thing. And I never heard that anybody. So good work. You get a A+ on that answer.
Thank you. Well, I'm a former CFO, and also I think I think more so I'm a math nerd. So you've heard me use the word math twice now. So there's that too.
Yeah, that's helpful. Okay, great. No, I appreciate that someone's thinking about it because, like I said, I've had podcasts where I really stretched to try to get somebody to answer it that way, and you just dumped out here. So that's great.
Great. Good.
All right, so let's spend just a couple of minutes around the virtual side of your organization because I know you're a tech forward operation, and we
Sure.
talked about this, in prep. But tell me about your virtual strategy that might fit outside your footprint. What are
Yeah.
your thoughts there?
I think you mentioned earlier we're focused on an omni-channel experience because we think that's where we can differentiate. We don't want to rely just on branches. Obviously, I call it we're not going to out fintech the fintechs necessarily on the technology experience side. So, how do we do kind of all those things well and in a way that truly is omni-channel? Again, that term's been around for 10+ years and we've heard it a lot, but to us, we're committed to that. We think about investments from working where the biggest impact, and so we don't see a trade-off between the physical and virtual. It's really about where do we think we can best serve markets. And I think for us, probably much like a lot of credit unions, digital is an area that historically has been more digital, just delivery and service to existing members and where you had branches. Like that's probably the easy path to think of. I think what's newer for us, frankly, and that we're experimenting with is can you digitally engage with a potential new member, onboard them, and then build that relationship with them in a purely digital way. And we do have members who come to us that way, and we've seen that number increase. It's been a while. I say it's been a while. It seems like it's been a while since I saw the number. I saw it not that long ago. I just can't recall it, but I think we've gone from something like 20% or so digital only account opening to upwards of 30 or 40. And of course, the challenge is once you onboard them with that product that they're coming for, how do you deepen the relationship? So for us, we're at a place where we've made investments in technology to allow us to begin to better personalize the experiences and a place where we really can do experiments, right? Where we can start doing that A/B testing and whatnot to see what resonates. And then once we learn from it, how quickly can we scale it?
We'll be right back.
Is your technology spend getting a little out of hand? Are you worried about making those big strategic moves because of those hefty vendor contracts? Or maybe you just feel like your technology is currently holding you back. In today's banking world, overspending on technology is a risk you just can't take. Going up against those major vendors on your own can be tough, expensive, and especially when the contracts are designed to benefit them. That's where Remedy can come in. Remedy Consulting helps our clients stay competitive and grow their business with the right technology, products, and their spending strategies. Not a Remedy client yet? Head on over to remedyconsult.net for a free review of your tech stack, spending, and contract terms. Even if you're not the perfect fit, you'll walk away with expert advice and confidence in your technology decisions. Check us out at remedyconsult.net or give us a call at 262-955-7776. Thanks for tuning in, and now let's get back to the episode.
So let's go back to omni-channel a little bit.
Sure.
Could you define that? I think you mean the concept of both physical and virtual there, but because that's used fairly broadly. When you think of omni-channel, like how do you talk about it internally?
Right. Yes. Yeah. So for us, it's we want to have experiences for members that are integrated regardless of what channel they choose to interact with us in, and if they choose to channel hop. So it's not restarting. If I start on a phone, I can move to digital. I can go to the branch. I can do any order of those things, and that wherever they left off is where they start again in the next channel. It's not a again, it's that seamless kind of handoff of data and information between the channels themselves, and that the member truly has can interact in the channel of choice, frankly.
Okay. So now I'm going to do a little bit of deep dive in some things we didn't talk about before. But if let's call it somewhere between 20-30% of your new accounts come to you virtually, and I may have that stat wrong a little bit, but whatever that percentage is, the ones that come to you virtually, do you know if they're in your physical footprint or not? Or are they from outside of Texas, or are they a university student who likes to open that way because that's just what university students do?
We do track where, obviously where they're located, how they came to us. So we still try to capture the data up front around, how are they eligible to join the credit union? Is it through a university or some other means? And it's a blend. I think it's a lot of it. We have the most brand recognition in Central Texas. So most of that is coming, here where we have physical locations today. I think what we're experimenting more with is in Houston, where we have about 30,000 members in the metro area. How do we, alongside of our physical expansion, how do we build some digital growth as well and build a brand that's known? Because as you know, through your conversations, that it's challenging to build a brand, especially digitally in any market. And again, we're trying to do that in a way that's impactful, sustainable, and again, being good stewards of the members' money that we're spending the money well as we think about that growth and expansion.
If you have somebody that opens one virtually,
Mhm.
Do you have the data to track whether or not they become a virtual and a brick and mortar? That's it, meaning they opened it virtually, but they do still have need for services. I would assume that in many cases, back to your point of, at a certain point in your life, you want to visit a branch because you want to have somebody sitting across the desk from you, right?
Right. Right.
Do you have data that tracks the virtual opens or the virtual new members or whatever, and what how they whether or not they become omni-channel truly?
We do. No, we absolutely know. So we can track all of our members' activity with us, regardless of channel. And so we can track what activities they're doing and what channel, how often, how frequently. So we do have our data science team has built out the tracking to do that. And so for us, what that allows us to do is we begin to learn what their preferences are, and we learn how to better connect with them in those channels and serve them in those channels too, and make them aware of, are there other ways in which if they're trying to do something at a branch that they could do more simply on their phone, that those options are available to them as well.
So then one other question I have there is we we spent a little bit of time in prep talking about how you think of user data and just how you use it to better able to provide something for a member that's both meaningful at a certain time in their life.
Right.
Can you expand upon that a little bit?
Yeah, and, one of the things, we are credit unions and community banks, right? We're trusted with our members and customers, in that case of banks, with their finances, right? But also there's not just their money, but there's a tremendous amount of data with that, right? And so whether it's their spending, they've applied for a loan, you have a credit history, credit data, income. And so you take that very seriously, obviously, from a safety security standpoint. Trust is essential it's the foundational, right, to everything that we do. And so we want to be mindful about the utilization of it. But we have all this information. And so for us, many years ago, we hired an outside design thinking firm to help us do user research. And that research was highly illuminating from the perspective of members. One, they trust us. We knew that. The second and third insights were surprising to us. One was they believe we have all their data. And we do have a tremendous amount of data that either, again, through utilization of our products and services, or third party data that's available to us as well. The last part was that our members want us to tell them what to do. Now, they don't mean obviously be directive with them, but they want to know clear path forward is, because finances are confusing and they're complex for a lot of folks. And so how do we help utilize their information to help them again at those moments in their lives, right? It could be something as simple as how to do something more easily from just an account maintenance perspective, or it could be, they're going through something in their lives that we notice that we could be helpful with. And so offering up not just advice, but even the ability to fulfill upon something. So here's an example. Let's say a member has excess funds in their checking account that they don't touch every month. Well, there's an opportunity for them to either move to a CD or a higher rate product of some sort, or with our investment services. So what if you could simply offer them the ability to transfer that dollar amount into a CD at this rate for this term with the right disclosures, and click yes, and it's done, versus for them to have to do any work of, well, let me go research, let me go find these things, right? But really present the best thing that's for them at that time.
Yeah, and I would almost argue that, because I think we've all been there, right? We've all been at a place, and again, unless you're a UFCU only member, right? Like that's the only financial background you have. Most folks I know in a CEO role also keep an account in other places. Maybe don't use it, but just to know what the other guy's doing, right? So
Right.
I think we've all been in a place where you get an offer that you're like, this doesn't match me at all. This is not like,
Right.
I feel like I'm being bombarded by offers and none of them match what I want to do today. My argument's always been, I don't know that I need to make the most money on a CD, right? I need somebody to give me the advice that don't spend all the money to check the account, and you're probably safe to take 15% of that and move it over, right?
Right.
It's that sort of, it's not optimization, but it's better than I am today. And for that, I'm willing to exchange the highest CD rate for somebody who's willing to give me the advice to kind of make sure that it doesn't take too much for me. And I need somebody that's helping me make good financial decisions.
Exactly. All right. So I think that's for us. How do you do that in a way that's thoughtful? I think back to Main Street businesses 100 years ago that knew, when their customers walked in, they knew all their customers, the new ones they got to know, and they were able to tailor and customize their offerings to them, and they could actually begin to anticipate their needs. So how do we do that with all of our data that we have at scale, right, to better serve people, right? And again, in a way that's putting them first. So something that helps them. And I think that's the real opportunity for us.
So my argument's always been that CEOs of a certain size, whether it be credit union, bank, what have you, just about everyone I've talked to has said to some degree, I don't have the data. I can't get the data. Can't get the data for my operation. Looking back to when you were smaller, it gets easier as you get larger, right? To be able to afford
It does.
Consultants, to be able to afford whomever, right? Whether that be consultants or a better tech platform. As you were growing up, or as the organization was getting larger, think back to when you were a lot smaller.
Sure.
What do you think the challenges, or how would you speak to somebody who's got the challenges of I can't get to my data? Is there any advice as to how you get your head around to, being of a certain size where maybe you don't have the profitability?
Sure. It's hard to have the resources, right? I think, when they got some of the largest banks in the world who have literally thousands of data scientists, right, who are going through their data and whatnot. I say start small, right? I think, I've been at UFCU for 20 years. I can remember when we were 600 million or so in assets, and the data's there, right? I find it hard to believe that you can't access your data. So I'm not familiar, obviously, with all the various technology platforms, but the data is accessible and in some format or fashion that's downloadable into, at the very least, an Excel spreadsheet if you have to. So one, the data is there. I think more importantly, you have to ask yourself, what is it you want to do with the data? What are your use cases? So I'd say start small. Find somebody who is at the very least an Excel wizard. A great thing with, if you're a Microsoft shop, Copilot's embedded into the system now, where you can utilize it in a way that's inside your network and protected and not populating the large language model. Learning to code and analyze data has gotten so much easier from what it was 20 years ago with the tools that are available to us. Use those things to begin to experiment with. Find, again, the high value use cases that don't require maybe as much data or as complex data to start with, and just begin to learn. But the important thing is to start. You got to start somewhere. And what I would encourage credit unions of any size to do is, again, find what's most important for them and for their members, and begin that journey of, again, if it has to be just through Excel, then do it.
That's great. And I would argue that if you found somebody slightly passionate about it within your organization, not everybody on the teller line in the new accounts operation is utilized 100%, right? So sometimes breaking up the tasks into something that maybe is a little more passionate for them,
all right,
might help, not only help you with your utilization, keep them happier, and do amazing things for your operation.
Yeah, right.
Well, thank you, Michael. I appreciate you spending some time with us today. I do have my curveball question. I still want to ask you, if you don't mind. So here,
no, of course.
Yeah. So my curveball question is this: there's been talk with the current presidential administration about possibly pulling back credit unions' tax preference, for lack of a better term, right? And I think this has always been something that the banks and credit unions are going back and forth on. Why do you get preferential tax treatment? I don't. If that were to occur, right? How is that being thought of in credit unions of your size? Because I'd heard from somebody that maybe it's not as impactful, meaning that allows us into more markets, et cetera, et cetera. But can you give me just a couple of minutes on that concept? Are you thinking about that internally? Is it coming up? Is it where's your head going with that?
Yeah, no, we do think about it. We're certainly engaged there, as a lot of credit unions are. And, I'd start with saying that credit unions matter, right? And I think, we are the original purpose-driven, people-centric financial services providers in the U.S., chartered in the Great Depression to serve working America, and we're still doing it today. And I think for us, that there's over 140 credit unions serve over 140 million members, and basically the data that's been collected shows that there's over 28 billion of direct positive impact for members from credit unions alone. And so, to me, the numbers don't lie. Right, the federal tax exemption is providing an incredible return for all of America. And despite the rhetoric, it shows that we've been good stewards of what's been entrusted to us, frankly. And so I set that all up from the perspective of credit unions do matter, right? And I think for us, they matter not only for our members, but really for all consumers, frankly, and businesses, because we oftentimes have, whether it's the floor for rates, we actually help people, not just our direct members who borrow from us, but other institutions who lower their rates as a result of it. And same thing on the depository side or savings side. And so, yeah, anything that would threaten or jeopardize our ability to do so is concerning, clearly, right? And I think we all should be concerned about it, frankly. And, what I encourage people to do is look beyond the rhetoric and just get to the data and the numbers. And again, they don't lie. And so for us, yeah, we're concerned about that. It looks like at this point, obviously there's been a bill that's come out of the House that does not address that. Thankfully, that the credit union tax exemption is still intact in that bill, and obviously there's a Senate process to go through too. And again, I think it'd be a huge loss for, frankly, all of America if, in any way, that tax exemption were endangered or our ability to serve members the way we are today.
Okay. All right. So, final question for you: what would you say top 3 headwinds, tailwinds that you face in 2025, 2026? Like, what are you thinking about there?
Sure. Yeah, just 3, huh? Right now, I'm kidding.
Well, you get 3 of each. You get headwinds and tailwinds. So
okay.
Pick whichever one you want to start.
Yeah. Well, I'll do the headwinds and then we'll finish on the positive tailwind side. How about that? Yeah, I think for us, and this goes for a lot of credit unions too, I think, right? It's basically that I think consumer expectations have changed so much and they continue to do so at a rapid pace. It's how do we ensure that we are transforming our organizations to meet their needs, not just for today, but for the years to come. I think credit unions and the community banks too are at a kind of a critical juncture here where we have to commit to transforming ourselves digitally. And so that to me is, you think about all the mounting. We talked about data earlier. That's just one small part of transformation. And again, I encourage all credit unions and banks as well, to begin that journey. And so I think those things, and I think focus is also a headwind. I think one of the things that, there's so much opportunity for us to be helpful and serve others. And the number one thing I see here, and I see, when I talk to other CEOs, is it's focusing on the things that make the biggest difference. And
just too many priorities. Hey? I mean, you
too many. Yeah, everything's a priority.
Yep.
Nothing's a priority, right? Yeah. And so I think that's a headwind, frankly, is again just getting really focused on what's going to make a difference. And so we've made those choices where we exited some lines of business earlier this year and last year to focus on areas where we thought we could again make the biggest difference and have the biggest impact.
That's probably a tough choice, I'd imagine. Hey,
oh, it's very much so. Yeah, it's one of those things where, as you're going through the process, it's when you move from the head to the heart space of it, it's like, oh gosh, this is touching people's lives, and it's a tough choice. But at the end of the day, you got to do the right thing for the organization and do right by those people too. If it's not an area of the business you're going to invest in, ultimately they're better served in another organization that is growing and focused on them.
Yeah, versus letting it stagnate or not. Yeah, gotcha. Okay.
Right. And then tailwinds. Okay, much more positive, exciting.
Sure.
Yeah. I mentioned earlier that we've made some significant investments in leading technology platforms. I think I'm excited about our ability now to really begin on this path of hyper-personalization for our members, right? How do we serve, our aspiration is to be loved by millions of members and built to thrive for generations. And so we're trying to prepare an organization not only to serve the 400,000 members we have today exceptionally well, how do we do it for millions, frankly? We have a revered brand. We're known for authentically caring service. Well, I know we are. Our research and our NPS surveys tell us that. And then lastly, all those with this large aspiration, it's all about people, right? And it's got to have the right people too. So we've got an exceptionally talented team. And it really, from the board, frankly, our board of directors is quite amazing, especially when I look at the credit union space. And that extends throughout the entire organization. And they're all in on our strategy. We launched our new strategy to the organization a little over a year ago now. And there's been amazing response and just excitement about impacting more people's lives in the coming years.
And that's, it sounds like the strategy is based on, when I think of strategy, I say to myself, is that a marketing on the outside to kind of tell your 400K plus universe the way we're thinking about things, or is that internal to drive?
Obviously started with the board and the executive team first, and then cascaded out to the rest of the organization. And more recently, we've launched. We had a vision, mission, values that have now been replaced by what we call the UFC way, which is our purpose, our values, and our aspiration. And so those have now gone public to members and to the world.
Excellent.
Yeah.
Well, Michael, thank you. I appreciate you spending time with us today on BankTalk. Thanks for joining us. Is there anything else we missed that comes to mind, or feel pretty good?
There's so much we could probably unpack, right? Digital transformation, about there's things. This has been a lot of fun, Charlie, and I thank you for the opportunity, and hopefully we'll get a chance to do it again sometime.
Yeah, it feels like there's enough material here to have several podcasts, but I appreciate you kind of sticking to the questions and even with the curveballs.
Sure. And if folks want to follow up on anything I've mentioned today or we've talked about, the best way to get hold of me is usually through LinkedIn. Just send me a message on LinkedIn.
Excellent.
Yeah.
It sounds real good. Thank you, Michael.
Right. Thank you. Have a great day.
Take care. Okay, well, everybody. Well, thank you for joining BankTalk today. I appreciate Michael's time. I think he's got some great insights, and it's always good to hear from somebody of that size because I think many of our listeners are trying to get there, right? So interesting to kind of hear a little bit about the journey and the way they philosophically are thinking about how to grow members. That's all for BankTalk. So that's all for BankTalk. Appreciate everybody listening in today. Have a good day and keep on learning.
Thank you for listening to the BankTalk podcast brought to you by Remedy Consulting. If you'd like to reach out to Michael, check the description for a link to his LinkedIn profile. If you like what you hear, please rate, review, and share our work with others. Thanks again, and we'll see you next time.